Hello traders, welcome back to our channel. We want to thank you for all the support that you are showing to us. We reached 50,000 subscribers and this is a big achievement for our channel. You are going to see more video uploads in the future as many of you has requested. Now, let's continue with the video. How to manage the trade, this will be our object in this narrative. This setup was shared last week on our premium channel. We usually make a top-down analysis before entering any trade in order to have the big picture and the small one in the same time. The currency pair is Australian dollar, Canadian dollar. Daily time frame. Price broke above the last lower high, and this is a sign of trend change, as we have mentioned that in previous videos, and you are familiarized with. Price is extending in upside direction without any significant pullback. After the break of the trend we saw a large candle wicks. This is a sign of bearish pressure and sign that pullback might have been started. Our first duty is to define the first major zone that pullback might end. We noticed a clear rally base rally demand zone that will serve as our major target. We are shifting on 2-hour time frame. Our goal here is to define a potential and high probability entry in order to target the major demand zone on the bottom. The first element that we noticed was a clear supply zone near the top. Price broke the low and was pulling back. This pullback can target the liquidity on the recent high and probably create a fake out before dropping. We shift on a lower time frame again. We are here on 1-hour chart. Once again, the target is the edge of the demand. We noticed another supply zone below the first one that could become a potential entry. I am going to introduce today a crypto exchange. BitGet is a top 5 crypto derivatives exchange, world's largest crypto copy trading platform, and official partner of Juventus Football Club. You can choose to copy trade from more than 17,000 expert traders and profit with ease. Sign up with link below on the description of this video to get $800 in rewards. Session volume profile is another powerful tool to define the region of interest. The fresh point of control that is illustrated with a red line serve as a magnet for the price. You can find a video dedicated this tool on our channel. As we can see, our first supply zone correlates with the point of control. This characteristic gives this zone a higher chance of success than the other one. Now the plan is clear. We have 2 defined entry levels and 1 major target. Our job now is to wait for price development and make the move if it plays according to our plan. Price currently has touched a demand zone. This will serve as fuel for our pullback. One possibility is to enter at first supply zone with a large stop loss above the supply zones. This might sound more safer scenario, but is a little frustrating because the trade can stay in drawdown for a while. Next option is to trade each of the zones separately. We can split the risk in half in order to decrease the risk in only in one currency pair. Price started the pullback as we thought. In the first attempt it failed to touch the supply zone and dropped at the fresh demand that was just created. The price action was very bearish, but we must stay calm without entering any premature trade. Finally, we have the touch of the supply and rejected it, and reaching 1 to 1.5 risk reward. In this moment is recommended to move stop loss to break even. With this move we have collected again the first half of risk and can use all the risk that we splinted on the supply above. As we can see, price continued in upside direction, stopping out of trade at break even. The price action showed bullish strength and wasn't convenient to enter any short position at this level. Our main focus will shift at next supply zone that since beginning of the analysis has the most potential. Recommended broker is Longhorn FX. Trade a wide variety of assets with leverage up to 1 to 500. Check the link on the description to find more. The market structure indicates us that a fake out pattern could happen at supply zone. Price continued in upside direction and touched the zone, triggering in this way our second entry in this currency pair. There are two options in this scenario. The first one is to enter right away its supply zone with a limit order. This option offers a precise entry and predetermined and greater risk-reward ratio. The cons of limit order are that we don't have a candle confirmation. The second option is to wait for candle rejection pattern as engulfing, or shifting even lower in time frame, and to look for trend change pattern of the mini counter trend that is formed during the pullback. In this setup, price made an engulfing candle right after touching the supply and the fresh point of control. As we can see, we have large amount of confluences, and the probability of success is high, and it's worthwhile to enter a trade. Price dropped sharply, and as we did on first trade, it is recommended to move the stop loss to break even. The main goal of each trader is to protect their capital. It's a quote from Larry Hite that said, "I have two basic rules about winning in trading as well as in life. 1. If you don't bet, you can't win. 2. If you lose all your chips, you can't bet." The price made a small pullback and dropped again. We saw a long wick of hammer candle and decided to close the majority of the position there at 1:3 risk-reward ratio. Another reason why we closed the position was the inverted head and shoulder, a bullish pattern that was created in opposite direction of our position. Price bounced in upside direction at our entry level, consolidated there for a while, and dropped sharply in downside direction, reaching our final target at 1:9 risk-reward ratio. In this setup we booked only 3 risk-reward. This is the dynamics of trading. We can't predict the future. We only play the probability game, and with a strategy we keep the odds in our favor. Thanks for watching the video. See you to the next one.